Oil prices under pressure as investors wait on supply data due out later this morning. Price Futures Group's Phil Flynn at the CME Group. Phil, a report from the International Energy Agency yesterday says that OPEC may have to do more than just extend its current production cuts. What do you say?
I think they probably do unless we see demand start to go up. And there's no doubt that oil inventories this morning is one of the reasons why oil prices are a little wobbly this morning. We got a forecast from the industry group, the American Petroleum Institute, that surprised the market last night and said that oil supplies actually increased overall just by about 888,000 barrels, but the market was looking for a big drawdown. We did get a drawdown in the all-important delivery point, Cushing, Oklahoma, but it's raising concerns that the big oil glut isn't draining as fast as a swamp as we want. So that's a big part of what's going on here. We did get mixed data on as far as gasoline supplies. We did see gasoline supplies fall last night. That indicates that U.S. gasoline demand starting to heat up a little bit. But a lot of the rain in the Midwest probably slowed farmers down just a little bit, and that hurt diesel demand because that's the big driver of that at this time of year. But make no mistake about it, the International Energy Agency called out OPEC. They said, listen, you got a lot more work to do if you want to get these inventories back to the 5-year average. OPEC said that they're going to do whatever it takes. We're going to find out later when they have that meeting May 25th.
Phil, it's Kevin Kelly. One of the questions I had for you is on oil rigs. I mean, I wasn't really surprised by the inventories given the fact that we're seeing more oil rigs coming online and they're more efficient. So you're getting more capacity coming. Is that going to hamper and be the biggest impediment for oil trading above $50 going into the near future?
I think in the short term, it's been one of the major factors why oil prices aren't above 50. But what we are starting to see is that some of those rigs that we added a few months ago have to be replaced already. We're seeing a huge decline rate in the shale rate. So what we're seeing here is even though we're adding more rigs, it's going to be harder to increase production because the old rigs have to be replaced. So that's one of the drawbacks on shale. You have to keep that drilling machine going to keep those production numbers come up, because you have to keep replacing rigs very quickly.
This is Steve Forbes here. Is there the global economy, is there much growth there that's going to increase demand for energy, or are we going to still have this relative sluggishness?
Well, there's a lot of concerns about China and India right now, Steve. And if you look at the China numbers, the data is really mixed. If you look at it on one hand, we're seeing a slowdown in concerns about banking. But if you look at their actual imports, they continue to stay strong. So there's a big question mark. The other big thing for global demand is you have to look at India. The India government has really been slowing down their economy a bit with regulations. That's been hurting things. And the other big thing is this Donald Trump situation. You know, if this slows down the U.S. economic reforms and the tax cuts, that's going to hurt gasoline demand and oil demand in the U.S., and that could be a big issue going forward.